During Friday's Asian trading session, spot gold is consolidating in a narrow range, currently hovering around $4,460 with an overall strong volatility rhythm. The market is focusing on the U.S. December non-farm payrolls NFP report to be released tonight, and cautious sentiment has eased slightly. However, the lingering impact of geopolitical risks and the positive factors of continuous gold purchases by global central banks provide solid support for gold prices, with a dominant bullish sentiment in terms of geopolitics. The situation in Venezuela remains unstable. The follow-up impacts of the seizure of 2 related oil tankers and the arrest of President Maduro continue to unfold, coupled with the escalating differences between the U.S. and Europe over the Greenland issue. Global safe haven sentiment is unlikely to subside quickly. Central bank gold purchases remain the core support for the market. The World Gold Council stated that emerging market central banks still have room to increase their gold allocation ratio, providing long-term bottom support for gold prices. Regarding monetary policy expectations, Federal Reserve Governor Milan reaffirmed that he expects about 150 basis points of interest rate cuts in 2026, which is expected to create 1 million jobs without triggering inflation, further strengthening the market's expectations of an easing cycle. Affected by this, the U.S. dollar index maintains weak fluctuations, indirectly enhancing the attractiveness of gold. Short-term technical analysis of gold. The daily chart of gold shows that prices are steadily rising, relying on the 5-day moving average, forming a continuously ascending oscillating trend. The Relative Strength Index RSI operates around 62, with bullish momentum continuing to weaken. Although the index is still above the neutral line, its trend remains stable. In terms of key levels, upside resistance is concentrated at the $4,500 integer mark and the previous high of $4,550. On the downside, support focuses on the 5-day moving average around $4,470. If this level is breached, gold prices will further test the previous consolidation platform at $4,450. The market's focus is fully on tonight's NFP report. Economists estimate that 60,000 new jobs were added in December, with the unemployment rate edging down to 4.5%. If the data is weaker than expected, Fed rate cutting expectations will further heat up, and gold prices are expected to break through $4,500. If the data is stronger than expected, it may trigger short-term profit-taking, but the medium to long-term bullish pattern is hard to change. All content herein is for reference only and does not constitute any investment advice. Investors who conduct transactions based on this information shall bear full responsibility for their own profits and losses. If you find this analysis valuable, please subscribe, like, and share it with your fellow investors. Thank you for watching.